few things that destroy traders' careers. Three things, that are easily identifiable, um, but not so easy to correct, not so easy to fix. Over trading is one, right? Over trading is a big one, and the second one is going to be averaging your trades. So just a quick, example of that is buy 64 is the market doesn't go, your way, our way. You miss your out. You buy 50s, you buy 30s, you buy 20s, and then you buy evens, and you hope the market comes back. You go broke quicker than you can imagine. So number one is over trading. Number two is averaging your trades. And then the third way that I think, common way that we all destroy our careers would be to then pick tops and bottoms and fade markets. Friday out of the opening range, fading Friday strength is always a terrible idea. Fading that rally out of the opening range on Friday is always a terrible idea. Even if it works once, twice, three times here, it's a terrible idea because eventually that kind of stuff is going to lead to, I'm going to have to go off, hold on. It's always going to lead to overtrading. That kind of overtrading is always going to lead to averaging trades. All of these things feed into one another, and whether there's more than what I've enumerated here at this time, there are. But anyway, what we gave up in commission, what we gave up in commissions, and what we gave up in commissions were a lot greater than too. What we gave up in commission, what we gave up in seat lease and other fees and other things that cost us money. What we gave up, we got back, all of us, whether you're trading on the floor or off the floor. You were more likely to have better fills. You were more likely to have better price action and better everything. What we give up now in our group is we give up a couple of ticks. That's our price to enter a good trade. A couple of ticks. I'm not going to give up points. Not in the S&P. I'm not going to buy 55s and put a stop in underneath 49. I don't understand that kind of trading. Not anymore. When we're on the trading floor, or years ago, we had to do that kind of stuff because we didn't have access to literally every tick. Here on the screens in the S&P, I've got access to every tick. I decided to use them. If the top of the opening range is 55s, 41 55s, and I buy 55 quarters, if the market gets back inside that opening range, that's what I give up. That's what I give up to find the momentum of the market. That's what I give up to find that trade. That's what I'm willing to spend. That is my expense to find the momentum of the market based upon my my trading process that I developed over a long period of time. That's what I'm willing to give up. I'm not willing to give up anything else. A few ticks here and there. When we keep our expenses tight, then we put ourselves in a better position to be able to immediately move on to the second part of every trade, which is managing our profit. It's interesting that so many traders that open up trading accounts, put money in there, download a trading front end. You've got a broker calling you, offering their assistance when they really don't know what to do and how to offer it. And now you're a trader. Now we're all in the same boat. Whether you've been trading for 20 years or 30 years and you've got a net worth of $100 million, or whether you've been trading for 20 minutes or 30 minutes and you've got a net worth of 10,000, we're all in the same boat. Second that market opens, we are all the same person. Truly doesn't matter how much you have. It doesn't. Not in my mind, it doesn't. It doesn't matter who you think you are or what you think you are. It doesn't. Because once this market opens in 10 minutes, we are all in the same boat. We all have to concentrate and focus only on that next trade. If we concentrate and focus only on that next trade, now we are more likely to buck the odds of 90+% of traders that fail. in 10 minutes when these markets open and we are all defensive traders, one trade away, one bad trade away. Bye, baby girl. Have a great day. I love you. We are all one trade away from either blowing up, or we're one bad trade away from a series of bad trades that is going to take away every dollar that we have worked very hard for. You know the old adage, you've heard me say it a million times, you've heard Ira Harris talk about it. The best way to make a small fortune trading futures is to start with a big one. It's something I said last night, which was in our group mentoring, was, and we fleshed it out a little bit, is I know a lot of bold traders, man. I've been one. I've been a very bold trader, but I don't know very many old bold traders. I told you guys I was going to start slipping that in once I was able to get that down without screwing it up in my backwards way of remembering things. So now I'm going to keep saying bold old traders. Thank you, Spence, for the obligatory LOL. Anyway, it really is really, trading really is simple. It's got to be, right? I mean, we can make it as complicated as we want to for trading complicated spreads along with options and things like that. But even when it becomes more complicated, it all has to boil down to the same simple the same simple management, both risk and profit. Two parts to every trade. Don't forget that. Managing your risk, managing your profit. Traders that are on a roller coaster have never learned how to manage their risk. Traders that are losing money consistently. Traders that are broken even have learned how to manage their risk, but don't know yet how to manage their profit yet effectively. Traders that are consistently profitable and traders that are ultimately profitable know how to manage their risk and know how to manage their profit. Traders that are ultimately profitable learn how to exploit their profit. So, that's a progression. That's a really hard progression to work through. I'm not one of those guys that thinks that we have to blow accounts before we become a real trader. I was a real trader the second, as I said earlier, I was a real trader the second that I opened up my trading account. The second I downloaded a front end, that made me a trader. Okay. No different than Richard Dennis. The only thing is that Richard Dennis's accounts have more zeros. No different than Tudor Jones. The only difference is that Tudor Jones has a much bigger audience than what I have, I guess. And also many, many zeros behind him that I don't. But the thing that happens in 6 minutes or 7 minutes is when the bell opens, Tudor Jones and I and you guys are all in the same boat. We are just one bad trade away from either completely blowing up or one bad trade away that's going to start that big, gigantic downward spiral that maybe we don't see. Other people see, but we don't see it until it's too late. Which again is another important reason why we have people in our lives that we're accountable to. It's very important to be accountable to somebody, accountable for all of the mistakes that we make, and also accountable for all of the progress that we've made. Somebody to talk to, somebody to share things with, and somebody to get things going, and to keep us focused on where we are and what lane we've got. All right, so let's go over our price. Let's go over our plan real fast. All right, so upside the S&P, we're above that first target of 47.49. We have a price point of 53.55. Okay, that's where we are. So use 59 to 60. I'll make the adjustments to our plan as we get going during the day. But use 59 to 61, our first target. Use that as a price point. Our first target is going to be up near, oh shit, then we got a double price point. Our 64.66. Our first target's going to be up at 41.70 to 72. Okay, so we've got a while. We've got 14 points till we get to that first target. So maybe we use 41.64 to 66 in the S&P as our first profit point take target. We'll see what the momentum is like. Oh, real quick, I don't think we're going lower. I think today's going to go higher. Friday, Monday is if the last Fridays and Mondays, the last few months of Fridays and Mondays are any indication, I think we go higher. Okay, so give me a second. Let me talk about that instead of talking about individual targets. So I think we're going higher. I am going to take the first couple of attempts out, and then that's it. I'm still easing my way back into trading. I should probably spend a little bit of time on the simulator just to get that muscle memory and my timing back. But I'll trade micros unless something happens and I see it. Obviously, then I'll jump in and start banging out minis. But the point is I'm going to take those first couple of attempts out. So if it comes out on that first attempt and never looks back into the opening range, I'm assured of having a quick, easy, and very, very profitable day. After that, then I'm looking to take better attempts. I'll be looking for matchups. I'll be looking for all of those clues that we look for in the market, right? And I'll let you know what I see and what I'm looking to when I take my next couple of attempts. And then I'm going to cut my size. Back to what I was saying earlier. Tudor Jones has never lost his defensive posture and in trading, which is why he continues to reap in huge reward, because he has never lost that defensive posture in trading. He knows the importance of a good defense. There is no other way of trading. That's why another reason why most traders fail. There is no other way of trading except for defensive postured trading. I'm saying that wrong, but good defense with capital preservation at the core of every trade. So first couple of attempts, if I don't find it, I'll cut my size and I'll just wait and be more patient for the market to start to show itself to me. Now, while I am bullish in my sentiment or in my bias today, if we come out of the opening range on the downside, you can bet your ass I'll be selling them. And I probably will. If we break, I'll probably switch right over to the minis and start selling minis. But we've got 41.49 to 51. 49.49 or 41.49 in the S&P is a big target for us. It's a quarterly and a monthly. So the market, and it's been 41.49 has been a target for us for a long while, long before it became a lower high. So we're going to be looking at that. Now, Russell, 41.49 is a big area in SPOOs. NASDAQ, really nothing. Hold on, I'll look. But Russell, in the middle of all kinds of gigantic areas, 22 even, 22.08, up to 22.22, up to 22.67. Not 67, 66. So it's going to be interesting to see where this market wants to go, where they're going to try to push it. We are not going to fade it late in the day, and I mean it. I know a lot of traders that have made a lot of money buying breaks and selling rallies. Guys that fade markets. I know a lot of traders that have made a lot of money doing it, but I don't know very many that have kept it. All right. I'll see us all in live trade in a second. Everybody have a great day. Right before the market opens, we've got another minute and a half, or 2 minutes actually. Close your eyes, breathe deeply in and out, in your nose, out your mouth, or whatever feels comfortable, so that you can slow your heart rate down. You can slow your mind down. You come before the market another minute, because deep breathing right before, come relaxed with a relaxed mind or relaxed heart. See you in a second.